Hi, welcome to this video. Date is the 15th of October. It's Thursday at 7:30 p.m. GMT, just going to look at some trade setups that we really like. And in terms of the trade setups, they're in relation to what will happen in terms of the US elections. Now, in terms of the charts, we're going to take a look at them in a moment. Now, in terms of the last US presidential election, we traded that. You can go and see our videos on YouTube from back then, and it was a great time of trading because we did take the contrary view that Trump would win, and that gave some really great risk to reward trading opportunities. The volatility was also high for a good month before the election as well. This time around, it's a lot quieter coming into the election. The volatility is much lower, but I think it's going to increase as we get closer to the date. It's obviously just over 2 weeks away. Now, in terms of how do we see the election this time round? Well, the majority are seeing Joe Biden winning big. Basically, that's going to be good for the stock market. It's going to be good for risk on, good for US-China relations, bad news for the dollar. Now, I think, Biden could win, but he's not going to win, a really big margin, or by a really big margin, in our view. I'm going to go through my logic in a moment. I also think there's an argument that Trump could win. I think it's too close to call. Now, if we do have a narrow victory for Biden or for Trump, that's really bad news for the markets. Why? Because the loser will contest the election result. Both sides have already said this. That leaves the US without government. Well, lawyers in the Supreme Court sort things out. So I think, market a little bit blasé about, Biden just winning big. I think it'll be very, very close, and a contested election result is really bad for risk on. Now, in terms of how I see the polls and why I think they're wrong, they're making similar mistakes to 2016. In many cases, they're making worse mistakes. Just want to summarise that, take about 5.5 minutes. If you're not too interested in my views and just want to look at the trade setups, obviously you can just scroll forward. And some good trade setups to look at. I'm just going to go through my views on why the polls are wrong and why it'd be a close election result, and it probably will be contested. So let's just take a look at those points first of all, then go to the trade setups. All right, let's have a look at some facts in relation to the elections. And obviously, market looking for a comfortable Biden win. He may well win, but it won't be a comfortable win. It'll be a close win. Trump has a chance of winning as well. Our view is it'll be a close result. Whoever loses will probably contest the election result, which is the worst eventuality for the market. So we'll look at some trades in a moment. But I think, the moment media is just full of, Biden, comfortable win, blue wave, etc. I think as we get closer to the election result, market's going to get a little bit more cautious. But let's first of all look at how the market, how the polls see Biden winning. And just way too bullish of Biden without substantiation in fact, in our view. I'll come to why I think the polls are going to get it wrong, as they did in 2016, a little bit later. But in terms of many polls, they have Biden winning bigger than Obama in 2008. Now, Obama's win in 2008 was the biggest since Lyndon B. Johnson. Now, I just don't see that. Biden nowhere near as popular as Obama with Democratic voters. I think he's got an approval rating, or people who say they're specifically voting for Biden, it's under 30%. Obama was over 90%. You've got some polls saying Biden will win by a bigger margin than Franklin D. Roosevelt in 1944, which I think was the biggest margin in US history. Roosevelt, an incredibly popular president in terms of, obviously, he was riding on the back of, World War II was concluding as well. So Biden's going to win by a bigger margin than Roosevelt. The polls have got him winning big time in swing states as well. I mean, let's take Florida. Average margin of victory over the last 100 years, 2.5%. Quinn University has Biden outperforming this average by 400%. They see him turning around Pennsylvania as well, another swing state. which I think Trump won in 2016. I think it was the first Republican victory in 30 years, wasn't it? Pennsylvania, massive voter registration for Republicans going on there. They're very galvanized behind Trump. I just don't see, them turning or Biden, turning around Pennsylvania with a huge winning margin and winning huge in Florida. These are swing states. They're tightly contested. Okay. Now, if we take a major poll, which is the Rasmussen poll, they say that Trump only has 76% of the Republican vote. Okay. But he had 88% in 2016, and his average is 87%. I think if you talk to any Democrat or Republican, they would say not just 76% of the vote he's got. He's got much higher than that. So that low percentage would account for Trump losing. Okay. If I talk to both Democrats and Republicans, I know quite a few on both sides of the divide in the US. Neither side sees like a clear-cut victory for their party at all. They both sides think it's going to be close. It will be close. Now, why are the polls showing such a comfortable win? I think you can look back at 2016 and saying they're making similar mistakes. Most polls metrics tend to be too small. They're skewed as well in terms of the people that they interview. You tend to find that polls actually interview more left-leaning people than right, which obviously is kind of in favour of the Democrats. Okay, so it's kind of skewed. The focus is not on likely voters, i.e. people who are actually going to turn up and vote, but more on registered voters, okay, who may not vote. And shy voters are not factored into the results in the correct way. Now, what is a shy voter? You say Trump has got a lot of shy voters in terms of, I think it's 77% of Trump voters say they're weary of talking to family or friends about their voting orientation. That's a big percentage, okay? Now, a lot of those people will not say which way they're going to vote. They're going to tell a poll, okay? They'll just turn up and vote. In 2016, the shy Trump vote came into play. Trump won, and the shy vote was much bigger for Trump than it was for Clinton. It's probably the same is going to happen again. The shy voters, there's more of them now. Now, in terms of a poll that takes into account likely voters against registered, also factors in shy voters. It's the Democracy Institute. They got the result right in 2016. They also got the Brexit result right as well. They have Trump narrowly ahead. Okay, now a narrow win is what I would expect. Either side could shade it, but that's a contested result and high uncertainty in that. So I think as we move closer to the election, market volatility will pick up. I'm going to look at some of the trades I'm looking at right now. Obviously, the mix will probably change as we get closer to the election day, but I think the volatility is going to pick up now, and we should get some decent trading opportunities. Let's go take a look at some trades. Just doing some analysis now down the centre for the close of the day. So I'm going to use the charts from here. Now, obviously, in terms of our view of the US elections, we're just taking the view that we want to be long the safe currencies over the risk currencies. That means being bullish of the USD and JPY over risk currencies. Now, in terms of what I'm going to cover, first of all, the euro. The euro has held up just purely because we've had risk on. There's no other reason why it's holding up in our view. If we get a nervous market, I expect the euro to fall hard. And keep in mind, the market is very short of the USD. You can see my note here. The speculators hold a 2-year extreme in terms of long positions. Commercial smart money is heavily short. Built it up in this period here. Okay, we did fall down a bit, rallied back, and we're off a little bit this morning when I did these charts. There hasn't been too much change in the euro since I did the chart, okay? But just think now we're getting ready to roll over to the downside. We've got 2 weeks to go to the elections, okay? So that's going to be caution in the markets, and there's nothing good or no good news coming for the Eurozone. Okay, if we look at virus cases, they're spiking. Look at consumer prices, they're facing deflation. ECB are getting ready to do more stimulus. It's going to be a rollover soon, and then the specs will exit on stop. You see a big red now. That means specs are getting run. And from our experience with COT, we should go to 114, then down to 110. I'm just going to look at this very quickly, what we're doing this evening. There shouldn't be much change at all. No, just hanging on to the 117 level. I would sell back towards the 118 level, the round number, if not in, or go through 116.70. So clear of the next round number. Okay, it's been a boring pair. We've looked at it in previous videos, but if you trade the euro, I think it's got limited upside and a lot of downside. We like the euro proxies or correlated currencies. They've already started to break down. I'll look at one or two of them a little bit later, but yeah, euro USD hopefully going down. This is one that's very, very sensitive, a currency that I think anyone should be focused on at the moment. It's the AUD. It's proxy risk on, risk off currency. Very influenced by, obviously, we do get moved to risk off, it'll fall. But I think it'll fall really hard because it's just so overbought at the moment, discounting the best eventuality. The fundamentals are not going to get any better for the AUD. It did fall down here, rally back, and now she's falling away again. We should get down to 65. This is a pair that we're really, really interested in. Okay, and you can see just really come into it at 71.60. Same with the euro, really. We're looking for these pairs now to really hopefully run in the next couple of weeks. But if we look at the AUD USD tonight, see we're kind of off the low, but this level here, 70, is a big level. I just want to show you on the weekly chart. Okay, so we're short already, obviously, but if 70 gives way, you can see it's a big level here. Then 65, you can see my target, then maybe even low. This is a massive move up. Aussie very overbought, not just on the USD, but generally, okay? So looking for this one to break down, just sell further weakness below 71 or just back to first level resistance. I'm not going to look at so many pairs today. I'll look at more when I do my forecast at the weekend. I just want to pick out a few because we're just kind of getting in motion, in my view. Canadian dollar, risk off, bad news for any commodity currency this morning. Kind of like just trading up blue. We had 4 small candles after that correction. Looked like the selling was exhausted. It's actually come up okay this evening. So dollar kind of getting ready. Let's go to the daily. See a bit more of a volatile candle. Dollar just doesn't have much downside at the moment. I think we're going higher. Okay, 137 the target there. Let's look at some crosses. Let's start with one pair which we trade heavily, which is Euro JPY. Sorry, there we go. JPY will firm up the US dollar. And I like the way this chart is unfolded. You broke down here, then you get the rally, okay? You've seen this in the pairs that we've just looked at, actually. The rally back and then off the levels, okay? So now I would expect the euro to follow through to the downside with, rallies being capped by these 2 lines here. So really you're looking at the 125 level. So so if you come up through 124, you just sell back through the level or take any weakness off 125 or 123.37, go through the round number 122.80. I've got 118 as the target, okay? So it's a really good looking risk to reward trade, obviously, if our view is right. That comes from the way we see bond yields. So, we could be going down 500 pips. We may even, if we've got big risk off, run on to 116, okay? So we like look of Euro JPY. Said obviously we're bearish of the AUD. Another one worth watching is AUD CAD, because the Canadian dollar will be the strongest of the commodity currencies going forward. I said this quite a bit on my Facebook page, and yeah, obviously in the member centre notes. But breakdown there, rally back. It's 20-day moving average holds the rally. We're moving away. Should get to 90, maybe even a bit lower, 88. Also, I like the look of the NZD short on the CAD as well. We get risk off. Yeah, the CAD will do better than the AUD or NZD. AUD and NZD, yeah, weaker than the CAD going forward. Now, in terms of the AUD, go to another AUD pair. I've got the right one, yeah. AUD JPY. Yeah, we just think the AUD is going down anyway. Okay, it's going to go down across the board. Which which currencies are going to go down the most on? We don't know. Could it be the USD? Could it be the JPY? If we don't know, we'll do them both. We'll do them as one trade. Okay, so that's what we're doing. Again, a breakdown, the rally back, now heading to the downside. Now, in terms of this one, 400 odd pips. No, it's near enough 500 pips, 450 pips to here, first target. And obviously, you can add another, 250 to second target. AUD just so vulnerable. Okay. Also, in terms of the AUD, obviously, relations with China aren't too clever at the moment, and we think commodity prices are topping out generally. This is without risk off. Okay. So, yeah, what more good news is coming for the Aussie? I just don't see any. So I think it's very vulnerable for a move to the downside. What else have we got? Right, this pair is USD SGD. Now, in terms of the Singapore dollar, heavily exposed to global growth and global trade, so very influenced by risk on and risk off. And what I like about this one is the way the dollar falls to new daily lows. Okay, double bottoms, then we come back through the previous lows. Now we're getting ready to break higher. Speculators are heavily short the USD, and I think we could run up to 140, maybe even 142, but the volatility will be higher. I don't know if I said this earlier, but in terms of most of the trade setups that we're looking at the moment, they've got risk rewards of plus 3 to 1, all of them, and most of them are 5 to 1s. Okay, obviously our view's got to come to fruition, but on a 5 to 1 risk reward, you get 4 trades wrong, 1 right, you break even. Get 2 right, you're in profit. So we're hoping that a lot of the moves we're looking at there just starting in our view or poised to start. We'll see obviously as we move forward. At the weekend I'll cover more pairs and go into a little bit more background in terms of the fundamentals of each pair. I just want to show a few today. I'll show a few more. USD PLN. Basically, this is a weak credit and it's a euro proxy. Make this point often that if we're bearish of the euro against the USD, we'll normally look to buy the USD on a proxy or a euro correlated currency, because very often the correlated currencies will move quicker. USD is really pushing up on the PLN, and I think we're going all the way up here. Stop is behind second level at the moment. If we run tomorrow, I'll bring it up behind first level. Okay, like the CZK as well, another euro proxy. Okay, weak credits as well will not do well in terms of risk off. What else have we got? NZD JPY. All the commodity currencies against the yen are a bit similar. Big fall. Then you have the rally back, and then top out, and now we're going south. Rallies back to 70 as selling opportunities. We should go down to 66. I'm going to extend that actually to 64. So rallies are selling opportunities. I think this one has already confirmed a move to the downside. Did say earlier I liked both the NZD and the AUD short on the CAD. This one has come down okay. And yeah, if you wanted to come into, you do it with a very tight stop. 88 is the key level. Just a stop behind there. You can see where ours is. And we should be going down to 84. So good risk to reward if you wanted to come in fresh. Just a few more pairs. Let's have a look at what we got here. This is NZD USD. Down, rally back, same as AUD USD really. If we fall through support here, which is 65.80, could go as low as 60, 62 certainly. So yeah, just getting ready, good risk to reward trade in our view. I won't look at any more pairs in this video, you get the general idea. We're looking for the USD JPY to firm up. Yeah, we haven't got the big volatility yet, but I'm sure as we move closer to the election, it will increase. And yeah, plenty of other problems around in the global economy to firm up what is a very oversold USD, and also, well, the yen is very oversold as well. I'll do a video at the weekend, see how we're shaping up. Then I'll cover some different pairs and go into more background in terms of the pairs I looked at today. We'll see where we are at the weekend. So thanks for watching this video. Take care. Have a good day.